everyone, hope you are good and be happy always. Once again, welcome to Shachi's Academy, and today we will discuss demand forecasting's yet another topic, that is your business barometers. What is a barometer? See, barometer is a scientific instrument which measures air pressure and weather conditions. When you use this barometer, you will come to know that what is the air pressure and what will be the weather conditions in your environment. So, in the same manner, business barometers are the data points, are the conditions which will tell you in advance that what is going to happen in economy, what would be the general trends in economy. For example, when there was COVID-19, due to advent of COVID-19 in all the nations across the world, the demands dampened in all the economies. Why? Because people lost their employments and there was no money with them and they could not purchase most of the things in the market, and that's why there were depressive conditions in the market, and demand forecasting could easily be done with the help of that tendency as well, because companies knew in advance that pandemic is hitting the economy and they will not be able to sell much in the market. Most of the commodities remained in inventory, remained in their godowns, and they could not sell in the market. In the same manner, inflation is there, bank repo rates are there, Sensex is there, Nifty is there in India and other nations also. Stock exchanges may tell you that what will be the condition in your economy. Just take for example, if you get a job in any company or in any institution, you will get to know that you will get money and then you can buy more goods and services. In the same manner, when employment in general in any economy is high, then companies may come to know that they can sell good amount of goods and services in the market. And if employment is low in any economy, then people do not have that much amount of money, they can't buy more, and that's how companies will come to know that they can't sell much in those markets. And just for example, in India, people are earning more, people are spending more because they have a good purchasing power now and they have very high propensity to consume. That means they want to spend more and more on different goods and services, and that's why companies from all over the world are eyeing upon India. They want to sell in India, they want to establish their companies in India. And why? Because demand in India is all-time high right now in this century. Okay, so let's discuss what is business barometer. Here, by definition, business barometers, they are the data points that represent trends or sentiments in the market or general economy. Just now I explained that they are the data points. That means if inflation is 6% in any economy, that means what is the data for inflation? 6%. Or if repo rate in any economy is 6.5%, that means that too is a data point. So it functions on the basis of data points. Okay. Then it represents trends or sentiments in economy. Whatever trends are there, whatever is going on in the market, are there depressive tendencies in market, are there positive tendencies in the market? That's how people or companies may come to know that what is the condition in market or general economy. Okay, then examples of business barometers, what are they? Number one, stock exchange. See, stock exchange measures the trends and changes in the market. So stock exchange, in these exchanges what happens that stocks of 30 to 50 companies are combined together and their average performance is seen. In this manner, what happens that, okay, so stock exchanges have average performance of different companies and they can be high or low. If the average performance of stock exchange value is high, that means you have positive tendencies, you have bullish tendencies in the market. You might have heard of bullish and bearish tendencies. Bullish is positive attitude and bearish is negative or downfall in your stock exchange. If you have bullish tendencies or bullish stock exchange tendencies, that means everything is going on fine. Stock exchange is rising. So when it is rising, it is bullish. When it is falling, it is bearish. That means when it is rising, that means everything is going on fine. Companies are earning good amount of money. People are getting good revenue. Government is getting good revenue. People are getting employment, etc., etc. And companies are producing more. People are getting more employment, etc. Then here in India, we have Nifty 50 and Sensex. Sensex is from Bombay Stock Exchange and Nifty 50 is a combined stock of 50 major companies of India covering 24 sectors of India. We will cover this topic in different video. Right now I will be explaining that in brief only. Okay. So and here in Sensex we have 30 major stocks which are most frequently sold and purchased in India of the registered companies. Then here the benefits of stock exchange rise and fall, and what are the benefits of this benchmark. See, stock exchange is a barometer, and Nifty 50 and Sensex are the two benchmarks of this stock exchange. Don't get confused. And Nifty 50 here, it is N for national and Nifty for 50. That means it is combined stock of 50 companies. That's why it is Nifty National 50. Okay. Then here, now benefits of your stock exchange. What are they? It generates additional revenue. It generates additional revenue means that when stock exchange is rising, your Nifty is rising, either your Sensex is rising. In that case, companies are earning more, and that's how they are getting more revenue. They are generating profits for themselves. It provides liquidity. See, when you invest in your stock exchange, what happens? That you can invest in the stock exchange, you can earn profit and withdraw your profit also. That means you can get liquid returns. That means cash. You can withdraw your cash from there at any point of time, and you can invest at any point of time. That is more liquid form of investment is done over there. Then revenue for government. It obviously generates revenue for government and the economy as a whole. Then creates jobs. When companies are earning more, they will produce more, they will establish more firms, and people will get more and more jobs. That means positive or bullish tendencies will be there in the market. Then foreign capital inflows. Foreign capital inflows, that means if the Nifty or Sensex is rising in India, that means other companies, other foreign investors will be motivated to invest in India, and then more and more FII, foreign institutional investment. People will invest here in equities, in shares, etc., in different companies, and foreign capital inflows will be there. Then mobilize savings. People are having savings in their lockers, in their banks, etc. They can use their savings and invest in a stock exchange, and they can earn very high amount, a very high magnitude of profit from these investments and liquidify them. Okay, then all these are the benefits of rising stock exchange values. But if the value for stock exchange benchmarks like Nifty and Sensex is falling, then opposite of all these will happen. They will lose their revenues. They can always liquidify their assets, but revenue will be lower for government. Jobs will be lesser. Unemployment will be there. Foreign capital inflows will be lesser in amount, or they may withdraw their amount from there. That means foreign capital will flow from India, it will leave India, then mobilize savings, and people obviously can always mobilize savings, but they will lose their savings as well. So both ways it is there, and it can tell you what will be the demand in economy, and it is an important barometer for economy. Then we have GNP. GNP is gross national product. Gross national product means your total production of goods and services in any economy. So how it is calculated? See, all the companies which are operating in India, which are producing in India, that produce of all those companies is added together, and what is added? Money value of those goods and services is added. Suppose in India, if there are 10,000 companies, for example, I don't know the exact number, but let's suppose that there are 10,000 companies in India, and they are producing different kinds of goods and services across different sectors. But we can add the physical quantities or physical amount of those commodities. Why? Because some companies are producing cameras, some are producing your tables, furnitures, etc. Some are producing cloths, some are producing medicines, some are producing your sports goods. So what do we do? We add up the money value of all those goods and services, and that's how we get your GNP. So if GNP is high, that means goods and services in higher amount are being produced in your economy. Here I have written, when GNP is high, companies produce more. And when companies produce more, they give more employment to people. People have more money in form of salaries and incomes, and in that manner they can buy more. That means if GNP is high, people will buy more, and demand is very high. In that manner, if GNP is high, we can tell or not that demand will be high. In that sense, we can do demand forecasting easily on the basis of GNP values. Then employment. See, if employment is high, again demand forecasting can tell you that employment is high, then demand forecasting will tell you that demand will be high. Why? Because there is direct relationship between high demand and high employment. Because if employment is high, people will earn more and they will spend more on goods and services. Then industrial production. If industrial production is high, people will get more employment in companies, in firms, in factories, and they will earn more and they will spend more. That means in that case also demand will be high. Then consumer credit. If consumer credit is very high, that means if people are taking more and more loans and they are paying those loans, etc., in very nicely to the on timely basis to the banks, they will have high credit scores, and if they will have high credit scores, then they can avail more and more loans from banks. And if they are taking more loans from the banks, they can buy more goods and services in the economy. That means if credit score is high, demand will be high. Then lower taxes. If government of any nation is imposing lesser amount of taxes, the percentage of taxes is less on goods and services. If income tax is less, in that case, people will be left with more income in their pockets. They will have more consumer power, they will have more purchasing power, and they can buy more goods and services. That means demand will again be high if taxes are lower. Again, in case where there are high subsidies or subsidies are provided by the government to the people of poor class or general public as well on different goods and services, in that case also people will demand more in the markets and there will be high demand. If there is low repo rate, that means RBI, that means in India, RBI is the central bank. In other countries, different countries have different banks. Like in China, there is People's Bank of China. In America, there is Federal Reserve, and in other nations also they have different central banks. And the central banks gives loans to commercial banks. And when the central banks gives loans to commercial banks at higher rates, that means those banks will impose higher interest rates on the loans which they forward to public. And when public will take loans from commercial banks, it will be expensive and people will not get the loans from them. That means they will have less purchasing power and they will buy less. But here, if repo rates are low, we can get loans at lower rates and we can spend more and demand more in the market. Then low lending rates. If banks charge less lending rates on us, if interest rate that we pay on our loans is less, we will take more loans and spend more and go for higher demand for goods and services. Then inflation. If inflation is very high in an economy, people will have lesser amount of money, because if goods and services are very expensive, people can buy less in the market. That means if inflation is high, demand will be low in the economy. In that manner, with the help of these barometers or these trends, these projections, we can know that what will be the trend in the economy, what will be the demand in economy. So with the help of these barometers or these instruments, these data points, we can know in advance that what will be the condition, what will be the tendency of demand in market. And that's how these are very important instruments of demand forecasting. So take a screenshot. Hopefully this topic has been understood by you. If there is any query, please do comment in the comment box. Thank you so much. Take care. God bless you.